Justin Donald, I got to be transparent with you. This is a long-awaited thing for me personally. I've been following what you do for a long time. You might not know that because it's
No,
the first conversation we're ever having.
that's right.
Yeah. When I saw you at that party, I said, wait a second. I know that guy. And I got all fired up. And then here we are today. So thank you. Thank you
Yeah, I
so
remember.
much.
I think you and your girlfriend were there,
Mm-hmm.
and we've got a bunch of mutual friends. And so, yeah, what better way to secure a podcast than to just do it on the spot right there?
Do it on the spot. Lesson number 1. Thanks, Justin. So you're talking about buying back your time in the book, okay, which is an extremely valuable principle. We cover a lot of principles on this podcast. What would you recommend for somebody in today's world? How would you recommend that they start?
Well, I think anywhere is anytime you can take a step in the right direction, you're creating progress. And I think you can build on that progress. So we have a guy in our mastermind who is a true lifestyle investor today. But when I had him on my podcast, his name is Asim, and just an awesome guy, a brilliant entrepreneur. But generally, most entrepreneurs are not very good investors. And so we've been working with him on his investor IQ and creating his investment criteria. But one of the things he shared on my podcast, Lifestyle Investor, is his very first investment that he did that created cash flow actually was just barely enough to cover his annual Netflix subscription. And so he was so excited about that. He actually celebrated that moment. And from there, he just kept covering more and more and more. So it's like, then he covered his utilities, then he covered his car payments, then he covered his mortgage, then he covered, the luxuries of life. So today, fast forward, I don't know, the mastermind's been around for about 7 years. So fast forward about 7 years, he now makes $1 million, over $1 million a year in passive income. But it started with one Netflix subscription that was covered.
That's amazing. Where did he start? How did he start?
So he got into a real estate cash flow deal, that one that we did in our mastermind. We love cash flow because my whole goal is to help people. When you can replace what it costs you to live with passive income, then you're truly buying your time back. You don't need the financial numbers to actually make the pivots that you want, right? But most people kind of want that financial blanket, that financial security, that if they did make a move and did something different, or if they worked less, or if they, let's just say that they created a side gig or something, like they want to know that their current situation isn't going to be compromised financially.
When you say current situation, you're talking about their revenue that they're making from 9 to 5.
Yeah.
So to speak.
Yeah. What it costs them to live. Most people are afraid to make the leap to something else because they're afraid that their lifestyle might change, or they're afraid of the unknown. And so our goal is to help people truly cover their life in passive income and then get to surplus income. Once you have surplus income, now instead of working hard to save 10 to 15% of, every check that you get, now you've got 100% that you can use towards compounding wealth or impact type of work. Maybe it's philanthropic work, but now 100% of surplus income can go towards bettering your situation or bettering the situation of others.
Wow. How long does it take typically if somebody were to try to do something like that on their own versus when somebody plugs into your systems?
I don't have enough data on what it looks like outside. I mean, if you look at the general population, most people don't have any passive income. We certainly have a lot of shortcuts, a lot of frameworks, a lot of things that we like to teach so people do it the right way so they don't invest in the wrong deal. We created our own vetting deals course, so we actually can teach people, invest in these types of deals, don't invest in these types of deals. Here are the red flags, here are the yellow flags, here's all the questions you should ask. So we want to equip people with that. Now, in our community, we certainly do deals together, but my goal is that I'm not always feeding deals. My goal is that people develop the skills to be able to do them on their own. So what's the shortcut joining the mastermind? It's probably tremendous. I mean, our members would tell you that. But I think it just needs to start somewhere, whether someone's in a financial position to join or whether they're not. I think you just need to start taking steps in the right direction, learning how to invest, learning how to vet sponsors, finding deals that cash flow, finding deals that are conservatively underwritten. So even if we have an interest rate change in our economic environment, that the assets will still produce cash flow.
Let's talk a little bit about emotion, shall we? Because there's a lot of fear, especially when it comes to money, in the general population.
Certainly.
What do you notice with, let's say, your members of things that they need to jump over before they actually get started?
Well, I think for most people, they need a foundation of education. So one of the things that we do when someone joins our mastermind, and we actually are not adding a ton of people right now. We've been on a wait list for about 5 years. So we're kind of at a place where we've just opened up. We've opened up the wait list for this year because we are actually looking to add another 15 members to our community. But for the last 5 years, it's kind of been one in, one out. All right. And so before they do anything, we tell them, don't rush into any deals. Don't rush, escape the FOMO that exists.
Yeah.
Because everyone feels like it's the last deal and we got to get into it. And that's just baloney. There are always going to be great deals. There are always going to be great opportunities. We can't let our emotions dictate what we invest in and how much we invest in. We actually need a clear frame of mind. We need to come up with an investment criteria of why you would or wouldn't invest in something, which we help people build. You've got to figure out what your current asset allocation is and what you want that asset allocation to be. Figure out what some of your goals in life are, family, professionally, and all those things together create some of that foundation. And then there needs to be the education on actual investment and financial terms. And so we spend a lot of time teaching people, all these different facets of investing. We build out their foundation. So it's a very strong foundation. And then they feel comfortable, confident, and maybe moreover competent in investing in deals that we do.
Now, I've read another book that kind of kicked off my reading career back in college about the 3 asset classes. I want to get your take on this: paper assets, businesses, and then real estate. How true is that in your opinion? How deep does that go? Is there more?
I think that is a very limited view of, what an ultra wealthy family would do. So I like the simplification of it, but I actually don't like the application of it, because if you look at the wealthiest families in the world, if you look at single family offices, which are the organizations that manage money of the billionaires, if you look at multifamily offices, which are generally, centimillionaire and above, so 100 million and above, I study that data, and the data says that there are a lot more asset classes. There's public equities, which is the stock market. And generally, even though the mass population is totally in that, and the financial institution or financial services industry tells you that a balanced portfolio is 60% stocks and 40% bonds, that's actually not a good asset allocation. And
why is that?
Well, because the wealthiest people, they only have about 15 to 25% of their net worth in the stock market in the first place. So most people have their entire net worth in the stock market, or if they're an entrepreneur, they have their entire net worth in their business in the stock market. But the wealthiest families, they really only use the stock market. They are banking on an upward trajectory in the U.S. economy, but they're actually borrowing against that asset value to buy more alternative investments. So generally, 50 to 60% of the net worth of the billionaire class, and we can even say centimillionaire and above, is alternative investments. So that would be private equity, private credit, and real estate. A lot of people don't talk about private credit. That would also be oil and gas. That would also be crypto, or more specifically, Bitcoin. So, I think that to simplify it, having 3 asset classes could make sense to some that are maybe beginning their journey, but the people that want to model after what the wealthiest people do, that they would do it different. I mean, my whole goal is to democratize what billionaires are doing so that the average everyday person can do it. And more specifically, as an entrepreneur, I love to support other entrepreneurs. And those that are high income earning, but maybe have the golden handcuffs. And that could be, you're high up in your business and it is your, it's someone else's business, but you're high up on the corporate ladder, or it could be your business, right? And so we love supporting that community. But if you break it down, I can keep going. So real estate
This is great.
Of alternative investment. So 50 to 60% of net worth falls there. So inside of that would be broken up by about 20 to 30, maybe 35% in private equity. So private businesses. Inside of that, it's probably 10% venture. You've got real estate that's generally 10 to 20%. You've got private credit that's generally 5 to 15%. You've got oil and gas that's generally 1 to 2%, or commodities that are 1 to 2%. You've got infrastructure that's 1%, precious metals 1%, collectibles 1%, crypto, and usually this is more specifically Bitcoin. BlackRock has publicly come out and said that the asset allocation should be at least 2% of your net worth. On up to 5% of your net worth is what they actually said at Davos this year. So if you break all that down, the average person is nowhere close to that. The average person is overexposed in their business, which we all know has about a 95 to 96% failure rate, even higher in the earlier years.
When you say overexposed, that means they have over leveraged, not enough cash.
Well, no, I just mean they have too much of their net worth in their business.
Okay.
Or they're overexposed or have too much of their net worth in the stock market. And right now, as the market's crashing, you have a lot of people that panic. Well, why are they panicking? Probably because they have too much allocation there. I've always kind of believed that if you are checking all the time or you're losing sleep, you've probably invested too much in whatever that asset is or whatever that asset class is.
That's the litmus test.
Yeah.
Yeah, I heard Ed Mylett talking the other day on his podcast about how his investment strategy, wealth building strategy, is actually very simple. He's like, people always think that I have my hands in a million different things, when for him it's stock market, real estate, and just a few businesses. Would you say that that's true for these? Like, let's say you look at the families as an individual family, not taking on the whole, right? Is that kind of right? As far as an average, maybe 5 vehicles, give or take, or is it 10?
Yeah, I think, you could say there's probably 5 major asset classes, but realistically, some of these that I was talking about when I said, oil and gas, that's like 1 to 2%. Crypto is, maybe 1 to 5%. Precious metals is 1%. Cash and cash equivalents is 5 to 10%. Fixed income is generally 5 to 15%. So, you could add all those up, and some of them are really small. So I would look at it as like stock market, around 25%. I would look at real estate, probably somewhere below 25%, but not far from it. I would look at private equity above 25%. So maybe real estate and private equity kind of balance each other out to an average of 25%. And then everything else is 25%, and maybe a little bit less than that.
And everything else could be a mixture of things.
Yeah, a mixture of all the things I just said. Asset allocation was 1% or 2% or 5%.
That's good. This really gets me thinking. This is fantastic. So let's say somebody had $25,000 in the bank right now, and they want to implement the lifestyle investor strategy. What would you recommend they do, and what pitfalls should they be aware of?
Well, I think you first ask, how much is your time worth to you? So if you're looking to get a better return and you have the time, well, you might just buy property on your own, or you might just put, your cash into a property, raise money for the rest of it, because you're probably going to earn a higher return. If you don't have the time or the desire, well, then you probably find some sort of alternative investment and you invest in a syndication of someone doing a real estate deal, right? And that way you get yourself time to grow that investment. It won't be as great of a return probably as if you owned outright, because you're going to pay them to find and manage and grow it, right? And that is probably worth it to someone that doesn't have time. So, but the key is the sponsor is the jockey, right? The jockey is more important than anything else. A good jockey can make a bad deal a good deal. A bad jockey can ruin a good deal. So it is all about the sponsor and their track record, how long they've been in the business, have they weathered financial or economic turbulence in the past? Have they gone through, rough economic seasons? Do they know what to do? Those questions are paramount to me.
So I think the real work there is vetting was it the sponsor or the jockey?
Yeah, the sponsor. Same thing. Yeah, so the general partner or sponsor, or GP, that would be the person that kind of runs the deal in a syndication. And a syndication is just, raising a bunch of money from a bunch of people to do a deal. And so someone's going to run it. That's the GP or the general partner. And then everyone else are the investors. And that's the LP or the limited partner. And for people that don't have a lot of experience or don't have a lot of time, that's a great way to do it as long as it's a great group.
Yeah. Yeah. So taking time to lay that foundation, the educational foundation, is going to be pivotal for anybody.
For sure.
Vet your people. Figure out what questions to ask, then what questions to ask after that. Go 3 layers deep with your questioning because you're interviewing them.
Yeah.
And it's a big deal because I've actually seen firsthand where somebody with a great heart has lent money to a flipper here in town and things went south.
Yeah. I mean, it's all reputation. It's all experience. I mean, you want to find the best people in the industry that is strong in the current season and where these people have a proven track record. So they're not transitioning from something else. Like even if someone was successful in one industry, but they move to another one to invest, they're newbies in that new industry.
Yeah.
So to me, the track record is going to start when they kind of begin that new season.
Yeah. Yeah. And if you were to look at this visually, it's like you have to take somebody's hand and have them lift you up out of the hole or the bucket, so to speak. And then maybe do that a few times. Keep getting help. Or get higher and higher on the chart. And then at that point, you've got the wherewithal, right? But you've got to earn it. You can't skip a few steps.
That's
For
right.
us, the risk is just way too high.
I think so.
Right? And you can't do it alone, right? The moral of the story is no one succeeded alone. So get some help.
Yeah, if you think about, I attribute a ton of my success to the mentors that I've had and to the peer group that I've had, and then to my own continuing education, self-study, right? So without the influences in my life, without people that were playing the game of business and life and investing and wealth creation at a higher level than me, then I'm not going to be able to level up as quickly or as smoothly or as easily.
So what ecosystems would you attribute to that? For you specifically, have you tapped into any named ecosystems that have?
Oh, certainly. Yeah, I mean, I'm I'm a member of 14 different masterminds. 14.
That's
all right?
Amazing.
And then I run 3 of my own masterminds. And so to me, there is no greater place to spend and invest money. Like when I think about the money I make, how do I get the best return on those dollars? Well, before it's even in specific investments, it's actually investing in me, in my education, and in my health. It's investing in my peer group. It's investing in, which by the way is masterminds or other groups that you can get part of. And then it's investing in, mentors or coaches or people that can really help you move the needle.
Like one-on-ones.
Yep.
Okay.
And then fourth for me, and this isn't necessarily in the actual order, but I love spending money on friends and family and creating epic experiences. So like that to me, where do I spend my money? It's on those things. Do
you have that written down somewhere, or is that the way your mind works? That you can just categorize them so quickly like that?
Yeah, I work. So I don't have it written anywhere, but I'm kind of, way back in the day, I remember reading Robert Kiyosaki's second book. I read his first. I read all of his books, but his second one is called Cash Flow Quadrant. And so he had a quadrant. And, he talked about employee, self-employed, business owner, investor. And so ever since I read that book, I now think in quadrants or in lists of 4.
Yeah.
And so generally, I can simplify down to 4 items.
Well, that's good.
Yeah.
I read that book too. It's very memorable.
Oh, it's fantastic.
Yeah. I recommend it for sure. So we're big on principles here at the Elite League podcast. Sometimes we say the same principle episode after episode just by coincidence. You mentioned a few in your book. What have been the most helpful? What ones do you repeat the most?
Well, the whole book is built around my investment criteria. So the 10 commandments for cash flow investing for passive income and financial freedom are built around my 10 investment criteria, my original 10 that led me to invest in the deals that I did and kind of create the wealth, the passive income that I have today. So it's hard to say of those 10, what's the most important. I think they're all important. They're certainly important to me. I think people need to make decisions about what it is to them that is most important. But, my very first commandment is lifestyle first. For some people, that may not be the most important thing. For me, I make decisions based on, does this support the lifestyle that I want to have? Is this going to create a job, right? I don't want to buy a business that is actually a job. So if I buy a business, it has to come with an operator, or I have to know who the operator is to run it. Otherwise, that steals from my lifestyle. So I've said no to a ton of businesses because it violates my first commandment, and I'm not going to work any harder or any differently than I do today. We could look at the second one, and I think many people could say that's the most important one, and that's reducing the risk. That's the second commandment of the lifestyle investor. And to me, that's so important. I would rather invest in less deals and have more that succeed than invest in more deals with more that fail, right? Like that reducing the risk. I mean,
quality over quantity.
Yeah. If you lose money, well, it takes twice as much work and twice as much effort not to make more, just to get back to where you were.
Sure.
So I would rather say no to a lot more deals, and I'd rather be very risk averse. You move into the third commandment, and that's finding invisible deals. Well, that's my bread and butter. I mean, that's how I've gotten so far ahead, is I've found deals that are off market with no competition and not being bid up. Or I find people that aren't even thinking about selling, that maybe I talk them into selling because that outcome sounds better to them now, but they never considered it. Or I follow trends and I notice, certain trends, and I think this is going to become mainstream. But if I can get in early, which I've done with a ton of my investments, I did with mobile home park investing. Before that was popular, people thought I was crazy. I did that with single family home rentals, so SFR. Before that was even an asset class, I was investing in them. I built a company around them. I got into cannabis and hemp and CBD investing way early, before it was ever mainstream, and did very well in those. I got into AI and robotics. I mean, this is kind of the buzz and the talk today, but I've been investing in them for a decade, right? Maybe a little longer in some instances. But I did believe that was a trend for the future. And so I think, for invisible deals, it's not just finding stuff off market, which is helpful, but it's spotting what is going to be, the main thing. And with millennials, I mean, that's if I can figure out what they want to do and how they want to spend money, that's the next trend, right? So the largest wealth transfer in the history of the world is taking place over the next 5 to 15 years, with assets from baby boomers passing to millennials. It's estimated, I've seen at the lowest $80 trillion and at the most $106 trillion. That's the most money that's ever changed hands in the history of humanity. Well, what do I know? I know that the people that control money and assets are the ones that I want to understand, like how I can add value and how I can support them. So I want to be investing in businesses. I want to be investing in concepts. I want to be investing in things that they want. How do they live? How do they travel? How do they like to work? How do they like to, just relax? What do they do for recreation? What do they do for vacation? What's their family lifestyle like? Are they, what are their vices, right? I mean, we're starting to see one of the biggest trends in U.S. history away from alcohol, right?
Mm.
So like right now, I don't know that I would have any interest in any sort of alcohol investment, because I think the next wave and the next tier are really against it and really focus on quality life and longevity much more so than alcohol. Now, there are other products that they consume, and I'm interested in exploring those more. But it's little trends like that that become big trends that I like to pay attention to.
Now, earlier you said that there's always going to be a deal, and people feel that tension, and they're eager, and they might pull a trigger too fast, right?
For sure.
Yeah. Well, what variable is it? A simple shift to the left or to the right to find a deal in any market?
I think
Is
it's
that
just
possible?
maybe. I think it's more clarity on what you're looking for. So A, most people don't know what they're looking for. B, the ones that do may not have, the fail safes in place to protect them. They might make too many emotional decisions. They may not, check my second commandment, reducing the risk.
Yeah.
They may not check the downside. So anytime I invest, I say, what's the worst thing that can happen here? And can I live with that? What's the
no
best?
regrets?
Yeah. What's the best thing that can happen? And then the reality is it's probably somewhere in the middle.
Yeah.
Right. But can I live with the worst possible outcome? Can I live with this deal going belly up and I lose everything? Can I live with that? If not, then I don't invest.
Do you remember your first deal?
Yeah.
When was that? What year was that?
Oh, 15, 16, maybe 17 years ago.
Okay.
It was my very first. Now, I had done some deals in the past. I mean, I had invested in the stock market, so I'm not counting that. I'm kind of looking at when I got into alternative investment. So I guess you could say my very first deal was in 2004 or 5. But I would say my first successful deal came a couple years after that.
Okay. What happened with the first one in 2004 or 5?
So that one I bought, actually it was 2005. So it was during the ramp up of housing values. Your homes were going through the roof. You could do stated income loans. There was no verification or very little verification.
Yeah.
And so I remember investing in my first rental property, but I did a poor job on understanding the price, understanding the economy, because shortly after this, prices came crashing down during the financial crisis.
That they did.
I was overexposed. I had too much leverage. I mean, it ended up being a train wreck of a situation, because when I did end up selling that asset, I had to come to the table. So it was causing me so much like stress and just mental, it just took up too much mental capacity.
Yeah.
When I was trying to do something else, I was building a business at that time, and I had to worry about renters, and I had to worry, like had negative cash flow. I literally was losing money every month.
Doesn't feel good.
No. And eventually I sold that property, and the worst part about it is I actually had to show up to the closing table with I think it was $165,000. So I couldn't close unless I brought money, because that's how far in the hole I was on this home.
No.
Based on the value of when I sold and the value of when I bought. So that was a great wake-up call to the fact that what I ultimately did is I bought a place that I wanted to live in.
Yeah.
But I ended up moving right away. And so then I tried turning it into a rental. And that wasn't designed to be a rental. And the numbers didn't work as a rental. And I would never invest that way ever again. But it led me to my next investment. That was a great investment. And I bought my first mobile home park. And the cash flow on that park, I bought it off market from a guy who wanted to sell, that I cold called. I cold called about 100 people, found this guy, bought his park. I actually bought 2 of his parks. But that first park replaced my wife's income. She was a teacher at the time, and she literally retired, and we started our family, and that bought her time back, which at that moment in life, that was more important to me than buying my time back, because we are on different schedules. She had a very strict schedule of when she taught. She had summers off and winter break off. I was in a business at that time where our busiest time was summers and winter break.
Dang.
And so it made it hard for us to travel because teachers can't really travel during the year, right?
Nope.
So I wanted to buy her time back so that we could buy ourselves more, like a more quality existence and not just be, ships passing in the night.
What'd that conversation look like? Okay. Mind you, there's a bunch of different ways you can invest. And you go to your wife, you say, babe, I'm ready to buy a mobile home park. How'd that go?
No, I think she probably thought I was crazy, just like all my other friends. Everyone thought that was the goofiest thing they'd ever heard. Now, I did have a friend that was doing it, and I had another mentor that was the largest private owner of mobile home parks.
Yeah.
And he took me under his wing, and I just saw the numbers. So I remember during due diligence, I had this thing locked up. I had 60 days to, kind of vet this deal and make sure that it was what it was, that if there were skeletons in the closet, that I would find them. And I remember waking up many nights in the middle of the night in like a cold sweat thinking, what am I doing? Am I just throwing all my money away? Because this down payment was $65,000. This is the most I'd ever put in on any deal I'd ever done.
Yeah.
It's the most money I'd ever spent at one time ever.
This is a big deal.
And it took me a while to build up to $65,000 of cash flow that I could do that with, or not cash flow, savings.
Did you have kids at the time?
I did not.
Okay. So you and your wife, you were a young couple at the time?
We were young, yeah.
Okay, young couple at the time and getting your momentum going.
Yeah.
Boom, $65K.
But she trusted me.
Okay.
And so at the end of the day, I said, no, these are emotions that are talking. I know people that do this. I know there's a playbook. If I follow the playbook, I'm going to probably get close to those results. Maybe I'm 70% as good as they are at the beginning, but that's a lot better than where I am currently. And so I made the decision to pull the trigger, and that decision was one of the best decisions that I ever made. In fact, that decision, it's funny. So Sam Zell was a mentor to me. He's from Chicago. I'm from Chicago. He got into real estate. I got into real estate. Was the largest owner of, he's most people consider him the greatest real estate investor of all time. He had the largest mobile home park portfolio, the largest apartment complex portfolio, and the largest office portfolio. He sold the offices right before the financial crisis.
Yeah.
And made a boatload, sold his apartment complexes. And
you were friends with this guy?
Well, I would say he was someone that I knew.
Yeah.
I don't want to claim that I was friends with him, but he was someone
in some sort of proximity.
Yes.
Ah, that's cool.
But the number one thing he never sold was his mobile home parks. And he will tell you, he did tell me, the best investment he ever made in 1982 or 83 was his very first mobile home park sale or purchase. Yeah. And so that was the beginning of ELS, Equity Lifestyle Properties, which is the largest holdings of mobile home parks. And so he just kept buying more and more and more over that next decade. And so...
Any idea on the numbers? How many mobile homes they own or anything like that? Oh, just because it's probably staggering.
I think they own tens of thousands of lots.
Okay.
Yeah, it's pretty massive.
Good for them. That's fantastic. Now, we talk about the lifestyle investor way of life. How do you know when it's enough?
Well, I think you would really want to predetermine what enough is, because if you don't do that, the goalposts will constantly move. Yeah. So it's interesting. I just read a study here recently, and it basically had people in all these different categories that they would say, hey, when is enough enough? And each person at every level, some were employees, some were business owners, some had an exit with their business. In every single instance, whatever number it was that they originally had said, it was always to the tune of about 5 to 50 million more than where they were at that current time. Wow. So I think if we're not careful, the goalposts keep moving, and we feel like we need more, and we need to keep up, or we need this experience because our friend had this experience. And I think if you can establish ahead of time what that is, then it's easier to have kind of like a finite number. And for me, by the way, it's not net worth. I think financial freedom eats net worth for breakfast, lunch, and dinner. I mean, most people are chasing what their net worth is, but there's very little utility in net worth. A lot of it is paper money. A lot of it is tied up in qualified plans or tied up in the market. And so you don't get utility today out of those dollars. So to me, financial freedom is the most important thing. So before I was ever a millionaire, I had financial freedom. My passive income exceeded my cost of living before I ever had a net worth of $1 million. And so that, one situation or that one concept forever changed my life. And so I think so many people are chasing this net worth number. Well, if you chase financial freedom, you get utility today, and as a natural byproduct, your net worth is going to grow. So I think most people are kind of looking at the wrong scoreboard.
Sure, sure. You're literally the author of the subject, on the subject. There's no other books really out there that nail it like yours does. What do you do to stay at the tip of the spear?
Well, I think I constantly need to sharpen my sword. I need to be around. I mean, so what I teach and share about what people should do to kind of level up and get ahead, it's what I do in my own life. I feel like I have to be the example of that. So when I say, I hire coaches, I still hire coaches. I have a coach today. When I say that I think people should level up and find peer groups where people are playing the game of life and business and wealth at a much higher level, I do that. I'm in all these different masterminds and all these different communities. And I think like personal education, I go to events, I go to seminars, I listen to podcasts, I read books, I read tons of books. Mm-hmm. I'm generally reading a couple books a month. And to me, I mean, that's it. If I'm going to tell people or teach people that this is what they should do, I don't want to be hypocritical and not do it. And really, like, foundationally, like at my core, I love to learn. I'm super curious. And the more I learn, the more I want to teach. So I love to learn. In my own mastermind, in the Lifestyle Investor Mastermind, though people see me as, really the founder of that, and most people would tell you I'm a facilitator, I look at myself as the first student showing up in the front row because everyone there is brilliant and they've done amazing things and I want to learn from them. And then anyone who's not an expert, I mean, our members are all experts at the thing that they do, but whenever we have concepts or topics where we don't have an expert inside of our community, which is rare, we'll find whoever is world-class outside and bring them in to teach. So I just like to learn.
Man, that's good. That's good. So let's talk a little bit about you in a different light. You were working corporate America before you got into investing?
Yeah, I would call it loosely. I mean, I think I built a business inside of someone else's business. So, technically I was contracted and employed by them, but really it was the business that I had built that they, contracted out.
Okay.
So to a certain degree, I was underneath the banner of a big corporation, but, in another vein, I was a small-time entrepreneur just getting started building a business under their umbrella.
Okay. Are you at all part of that right now?
No.
No. So you either sold it or something
Correct.
happened. You get sold. Okay, great. What about this life that you have now is exciting? Because something tells me that you are living through excitement. You wake up every day, you're fired up to get after it and help people. What about that?
Well, I love life. I've got a great life. My family's wonderful. I have, all these boundaries around, the time I'm going to spend working versus the time I'm going to spend with my family. I really work a schedule that's perfect for me. I generally work Tuesday, Wednesday, Thursday, and I take Mondays and Fridays off, or I leave them open for, creative work or hanging out with friends or, whatever that might be. So I love having an extended weekend. If I feel the desire to work, I can work. But really, I try to get most of my work in like 11 to 5 or 10 to 4, really Tuesday, Wednesday, Thursday. And I work on things that inspire me. I do things that I enjoy doing, and I want to have impact, and I want to make a difference. And I think that anything that doesn't fill me up, I just find someone else that's excited to do it.
Yeah. Yeah. Love that. Wow. Well, thank you for answering all of my questions. Today's a little bit different of our podcast recording style. We've got a little bit of a crowd here. I'd like to open it up for just a few questions from the crowd. Now, there's no mic out there, so I'm just going to repeat what you guys say into the mic. Ready? What you guys got for Justin? You might not ever see him again. Hopefully you do. What do you got? Go ahead, Aaron. What is the highest value skill set to learn today in order to accumulate cash to make investments? Very good.
It's a great question. And before I answer it, I think what I want to share is when I had little to no skills and I didn't know how to get ahead, my default was work ethic. And so I would work my tail off, and my goal is I would outwork anyone. And as I built a business, the harder I worked, the more income I made. And I liked that. I thought that was cool. Now, it became unsustainable because I was working crazy hours. I mean, some days I was working 18, 19, 20 hours. And I knew that that was just one season of life. Like I knew that that would end at some point, and I wouldn't, when I have a family, I would never work like that. But in that season, that was great because I learned to flex that work ethic muscle. What I know today is my skills are better. I've worked on sharpening them. And now I would never want to default to work ethic as the primary skill. So it's the thing that got me to that first level of where I wanted to go. But that same thing is what held me back from going to the next level. Because now I don't want to work harder. I want to work smarter. And I want to work with more intelligent people. And I want to build smarter systems. And I want to use AI and technology in a way that really amplifies what I do. I want to be able to work less, have higher output, have higher performance, do better financially, and have a better quality life. So, the question of what skill set, it might change over time, right? So when I had no skill set, it was work ethic. Now that I have a skill set, I mean, I don't know that there's a better skill set than relationship building. Like if I had to say, what is my superpower? Most people think my superpower is investing. It's not. My superpower are the relationships I've built with people that want to bring me in to the deals that they do, or want to bring me into partnerships that they're proposing, right? So if there was any single skill, to me, it's relational skills and fine-tuning how you can add more value than anyone else to anyone in your life that you would like to be like a mainstay in their ecosystem.
That was well depicted. Very, very clear. Thank you. Thank you. What else we got? Go ahead, Harrison. Keep it concise because I got to repeat it in here. How do you find the right people to network and build a relationship with? How do you make sense of what to make sense of?
Well, the great Jim Rohn said that you are the average of the 5 people you spend the most time with. And I remember doing this exercise at a Tony Robbins event, and Jim Rohn was Tony Robbins' original mentor. And so I remember, I didn't know what they were going to do, but they just said, write down, your 5 closest friends. So I wrote them down. And then they said, write down approximately what you think they make. And I wrote it down. Add it up and divide it by 5. I did. And then he said, how close is your income to that number? And it was literally spot on. I mean, like precise. And I could not believe it. And that's when I realized, wow, the people I'm around impact my capacity, my belief system, my expectations more so than I would have ever imagined. And it was in that moment where I made the recognition. It's not, so I recognize it's not that I need to like get rid of friends. I need to be very intentional with who fills up the majority of my time. So it was back then, and this is going back probably to 2007. All right. So, we're 15 years out, more than 15, 18 years out. Okay. And that's when I started doing this exercise every single year of who's my cabinet? Who are the 12 people that I am going to be intentional about spending time with? And then I had a separate category that was who are my mentors? And so what I wanted to do is figure out like who could help me play the game of life and business and wealth creation at a higher level, and how can I be in better relationship with them? How can I offer them more value? How can I be a person that they always want to come to? And that was really the start of it. So now with my wife today, we plan out, we have this annual planning day. It's like a family and marriage planning day. And we look at who her cabinet is, who are her closest friends, who are my closest friends, who are our closest couples that we want to be intentional spending time with, who are the people that we want our daughter around, and then who are my mentors. And so every single year in December, we go through this to set up the next year so that we can be intentional about who those people are.
I think that is so cool. That is something that anybody can do with a pen and a paper just to elevate your life. That's amazing.
It's funny. I got a story about one of the guys that ended up being on my 12 for the year. And I remember him telling a story. Someone asked, like, how did you guys become friends? And this is perfect because this basically embodies everything I just told you. He goes, well, Justin wasn't on my radar. I didn't know him at all. In fact, I didn't even know like who he was. But then he just kept on showing up in different ways. He would like ask if there was anything that I needed. And then he would actually like respond and produce results from that. And he kept doing that. And over time, I was like, man, this guy's really, he really looks out for me. He'd be a good friend. And so he basically told the story of how over the course of the year, I worked from being non-existent, not on his radar. He didn't even know who the heck I was, to being someone that he considered one of his closest friends because I just found a way to add value. And that's how it is. Like, even if there's someone that isn't on my list that I want to be on my list, like under the mentors category, sometimes those people I've never even talked to. They have no clue who that guy am. But it's my intention that year to like kind of, get into their ecosystem. I mean, sometimes it is people that I'm paying. And by the way, sometimes the only way you can get in their ecosystem is to pay them, right? So I always have someone that I'm paying to coach me in some area of my life. But it's interesting when you start chasing relationships and peer groups that are going to help you elevate. Because I have friends who are still my friends, but I felt like they were pulling me away more than they were trying to lift me up. And when I did experience success, there were little jabs here and there from some of them. And it's almost like they didn't like that I was getting ahead. And so it's not that we're not friends. I just limited how much time that we were spending together because that influence still existed. And it was actually more negative than positive. So I'm just glad I recognized that early on.
Awareness.
Yeah.
Huge. What else we got?
I got one. Say a time machine got invented. You could go back in time. You're 20 years old. You have $50K your name. What would you do?
Say a time machine got invented. You go back in time. You're 20 years old. You have $50,000 in the bank. What would you do?
Well, if I'm young, I mean,
You are young.
if I'm 20 young, I mean, this was actually pretty easy to me. I want to be careful that I'm not being a maximalist here, but I would probably just buy Bitcoin. That's probably the one asset class that if that's the only thing you invested in is going to most definitively go up and by the largest margin. Could you make a case for maybe putting half of it there and half of it into your first real estate deal? Sure. But if I'm that young, well, I can stand to lose the money, right? I've got so much time in front of me. but what has the greatest potential return? I don't think there's anything greater than Bitcoin right now.
One more question. Just one. What you got? At what point should you stop focusing on your ability to learn income, and when should you shift towards investing your money?
It's a great question. I think we're always going to have this ability to earn income. I think it's maybe more of a question of, do you enjoy what you're doing, and do you need to get away from it to do something else? Like if you love what you're doing, there's probably no reason to stop earning income. You know, Matthew Kelly calls it carefree timelessness. You know, can you spend time and just literally lose track of time because you enjoy what you're doing so much? So if
you have that side of you right now.
Yeah,
you,
for sure.
You have the earning income side, and yet still the investments.
Yeah.
Right.
Well, yeah, I turned a hobby into a very profitable business, but that wasn't the goal. Like I did not think that Lifestyle Investor was going to become this huge profit center. It's allowing us to do great work in the world and have a lot of impact beyond just the people that we're helping. I mean, the dollars actually go to many good causes like fighting human trafficking and all the book proceeds go there. So, we're talking, hundreds of thousands to millions of dollars that are going to these efforts. So to a certain degree, like I have a mission or a vocation that I'm so passionate about. I think most people don't have that. And if they don't have it, then you should transition and pivot to something that could be that, like take the chance to find that thing. Because when you find the thing, you don't have to stop working. But for most people, they're scared to find the thing that they love doing. So they need to solve for the finances first. So once they can do that, then they can kind of pivot to what it is that is most fulfilling and meaningful to them. So, my answer to you is, if you like what you do, keep doing it, keep earning money. At the moment that your passive income exceeds your lifestyle, your cost of living, well, now you're in a position where you don't have to work and you get to work. And that's a really fun transition.
And then going off what Justin was saying before, start with the end in mind. Like, what is the first goal for investing for you? That way, if the opportunity does present itself, you're going to know, right? Getting clarity on that. Right?
Yeah, I think that's great.
Yeah. Well, the name of this podcast is Elite League Podcast. We take people that choose to be the light in the dark to make the world a better place. You certainly fit that mold. This has been a fired up podcast, to say the least. Really appreciate you coming by, Justin.
Well, thank you. Love being here. And if anyone wants to learn more, go to lifestyleinvestor.com. We have everything there. My podcast, blog, free resources, online courses, master classes on vetting deals, tax strategy. We love saving money on tax strategy. On passive income, we have a passive income masterclass, a mobile home park investing masterclass. So all that beyond, that or masterminds and whatnot. But something I'd love to offer your audience, for anyone that's interested, we do these strategy sessions where we help people kind of move from point A to point B, and typically they're $500, and someone can sign up and really sit through a session with one of our experts. But I'd love to offer your community a free strategy session for anyone that wants to check it out. So if you want to figure out how to move to the next step or whatever the next level is, go to lifestyleinvestor.com/consultation.
Amazing, man. Thank you for that. That is so nice.
My pleasure.
I really do appreciate that. Folks, you heard it here first. All of his links are going to be in the description. My name is Greg Carlson, your host of the Elite League Podcast. Make sure to hit that thumbs up, tap that subscribe, and most importantly, everybody, stay fired up. Till next time.